All right, let's do it. Nah, cool. Appreciate it. That's really interesting. I really like the story. I've actually, yeah, I read all about it online on your website. So I'm going to try to ask you some questions that are not so obvious, that aren't just someone could look up the annual report or read your website and figure out. And I think it's nice to. I would say it's a benefit for you as well in a way to. I guess you want quality shareholders on board with your business, and I'm trying to give you a bit of an opportunity to hopefully highlight attract the quality shareholders that I hope you want.
And I very much appreciate your interest in the business. Anybody's interested in our business, but we do want long-term shareholders who get what we're trying to do and want to support the journey that we're on, because I believe it's a partnership with the shareholders. I don't see it as a relationship that's defined by the legal structure. It's defined by we're in partnership, and in my role is to be a partner, and that's going back to another area. I know we've got mutual interest in the sort of a Warren Buffett philosophy. You're working together to achieve something.
Cool. All right, let's jump into some questions. All right, so what's your long-term personal goals for the business?
The long-term personal goal is to continue to build the long-term. So short-term is to build the foundations of the business so it's very sustainable. And that's my ambition, is to make the business really robust honestly, for generations. So my longer-term goal on a personal basis is to establish the business that's got that sustainability, and the ethos is really clear, and that the principles underpinning it are so embedded in the culture that it persists for a long term. So a long time. So that is my personal goal. That's my sense of purpose, is to build a business that empowers others to build their own business and is self-perpetuating.
Yeah, before I hit record, you said that you felt like it's what you're here for. What the point?
It's my ikigai.
Yeah,
it's my ikigai. It's a Japanese expression in terms of what's your sense of purpose in life and what keeps you going. Because people are, I think, primarily your basic motivations, your Maslow's triangle motivations, but the top one is that sense of purpose. What is your vision? What are you about? And what I'm about, as my ikigai, is to empower others to build their own business and to build a business that enables that to happen.
Questions more now a little bit about, I'll dig into some of the business stuff. So thoughts about the dividend policy and whether there might be opportunities to deploy that capital in other areas rather than, I think you're aiming for 70% at the moment, the dividend payout. What happens if there's a lot of opportunity on the table? Do you feel like that is maybe counterintuitive to pay out the dividend?
Yeah, I think in those circumstances it would be. But I would hope to have a dialogue with the shareholders. I can't envisage me ever doing it because this ethos of partnership. I don't envisage us getting to a situation where it's going to happen like an overnight opportunity. I think I'll probably have a sense, Andrew, as the business is evolving, that I can see the wall of opportunities coming. I think it'll be an open dialogue. We're saying, I think shareholders, partners, we need to, reinvest those resources in the business. But I don't think that'll be an overnight switch. I think what fundamentally we do have shareholders who want the income, will support the dividend policy, and there might come a time in the future where there's an opportunity to deploy capital, and I'll make that decision on that. What's in the best interest of my partners? And I mean that in the shareholders, and all the stakeholders in the business.
Yeah, great, love that. And considering it's 70%, therefore the leftover sort of operating cash at the moment, you obviously don't need a lot of cash to grow the business because of the numbers look great. You've been growing, you've been getting more fee earners on board and still keeping, you've been wanting to keep the 70% dividend policy. So maybe talk us through in the best way you can, like what does it cost to get a fee earner up and running? And you're obviously not spending a whole lot on growth, but getting growth. Do you know what I mean? Like, could you maybe explain that?
Right. Well, there's lots of I can. Right. So in terms of how we sort of, or DSW capital like needs capital and how it deploys it. So our highest returns on investments are startups. Yeah. And what do I need to help a business startup? I don't need a great deal, because if you think about they're selling their capabilities, their knowledge, their ability to assess situations. So in terms of hardware, it's a laptop. In terms of software, it tends to be Microsoft packages.
Yeah.
So really what they need is a bit of physical infrastructure, desk and space, and drawings. They just need that economic comfort blanket to know that whilst they're getting up and running, they've got some money to pay their bills. So most of our investment that we invest in businesses is about that soft landing for people when they come in terms of being able to pay their bills. So typically, the most we've ever invested in any new licensee is 250,000. And that would be a function of how many people came on board and how long we thought it'd be a reasonable expectation for them to be cash positive.
How many people was that, by the way?
That's 4 people.
Oh, yeah. Okay. Yep.
So if you think about it, and in terms of their economics, and most of the businesses become cash generative fairly quickly, and then we'd probably see a typical maturity where they're confident in their prospects sort of 2 to 3 years in, and they'll start repaying the capital as well. So we'd sort of expect to have our capital returned in 3 years. But it varies, but that's a sort of typical profile. So I don't need a lot of capital for those opportunities. But what you might want to know is, so why did you raise the capital, James? So why I raised the capital, because the pace of growth and the opportunities that I see really requires to move quicker. And the easiest way for me to move quicker is actually to buy into existing businesses and license them. So that gives me an opportunity to get into new geographies and new capabilities quicker. And then once I've got those as established foundations, then I can roll out other service lines. I can replicate their service line in our existing geographies, or when I'm in the new geography, I can add in our existing service lines.
Can you give us just an example quickly, just because it might be clearer if, give us some.
Yeah, the example is quite difficult. So in our history, if I take the example of our business planning team, they were independent. So they were a team that had left Ernst & Young and set up a business planning division of their own. Small business at the time, we got to know them, only 4 or 5 people. Yeah. And we said to them, you're independently trading. Would you like to trade as DSW and pay us a license fee? They naturally said, why on earth would I want to pay you a license fee? What's in it for me? So we ended up effectively buying their business in terms of paying them for what they thought they'd pay back to us, being very confident that when they're part of us, they'd grow quicker. And that's exactly what's happened. So they were compensated for giving up some of their income, a license fee, but I was confident they would stay with us because their business would be transformed. It has been. Yeah. And the transformation about why these smaller businesses join us is because our brand's stronger. And I've got 97 professionals who are motivated to cross-refer work. So that cross-referral drives opportunities. If you're part of a larger organization, it's easier to recruit people. Yeah. So it's easier when you're trying to draw in young talent. It's a different proposition saying we're part of an AIM-listed PLC and we've got these offices around the UK. That is to say, look, there's 4 or 5 of us, we sit around the kitchen table, I think it's going to be okay. So from an employee perspective, it's much more comforting, but also dynamic in terms of the fact that we're a young business, newly floated. So there's lots of benefits for being from part of the organization.
Yeah, cool. So about that referral program you just said, I can see that as a bit of a snowball effect, I guess. As you get bigger, the more referral internally is going to happen. That's pretty cool. That's probably what attracts me to the business. As from an outsider looking in. Would you have any idea on, let's say, an independent was to join you, an uptick that they might see, say, in the first year or 2 from referrals might be what, 5% extra, 20% extra, 1,000% extra? Like what would you say is an approximate guess?
Well, the average is 15%.
You say 15 or 50?
15.
Yeah.
Yeah.
Cool.
but it will vary. Yeah. So this is a really important consideration in terms of how we're looking at opportunities. The closer the activity is to what we currently do, the cross referral rate is higher. Yeah. So if I can find more activities very closely aligned to what we do, so modeling was really good. So the modeling team had probably a 30% impact on their fee income, yeah, in terms of just being associated with us. So the opportunities I'm really interested in at the moment are things around tax. We're really represented in tax, but I've got 97 professionals who are constantly looking at businesses with tax implications of what they're and where they're advising. So that I would expect to be a really significant uptick. And then if you start moving further away in terms of wealth planning, I could see significance. So we deal with a lot of high net worth individuals. So I'm really interested in inheritance tax products, wealth products. But then I know then once we add on those other service lines, I will then add on things like pensions, because they'll that ability to refer and to correct that, create that wave, yeah, and to keep the ripples going and just keep add on that extra, service lines, similar to what the Big Four have done. So there's nothing magical in terms of what I want to add on. Yeah, I want to add on things that can directly benefit the people we've already got, and the best benefit I get is where it's close to what we currently do, but not quite the same.
How big do you want to grow DSW?
I've got significant ambitions for the business, but what I really want it to be is to be the destination of choice for ambitious people. I want people to do their training at the Big Four, yeah, and to have that aspiration about being technically brilliant at something, knowing that their role is to be an advisor. They like the challenge of the intellectual opportunities that are presented to them. But I actually want them to aspire to run their own business. I want those people to say, I'll do that, and then I'm going to go to DSW because I want to be in charge of my own destiny. I want to control who I work with, what the team is, what clients I take on, how I reward people, what my work-life balance is. If I want to work a 9-day fortnight, I can choose to implement that, because all my guys have complete operational autonomy. They can run their business as they want to, in their culture, how they see fit, and how they think best suits their marketplace.
Nice. What was the inspiration to write your books?
Really simple. It's transfer knowledge. Yeah. So, and for our teams, yeah. So I'm quite happy for other people to buy the books. But if you've anybody, and there's not a lot of people who have read the books, but to the extent that they have, you'll know they're really short. So one of my frustrations, I'm a great believer in learning and lifetime learning. But my frustration when you're reading books, and there are a lot of brilliant books and great ideas, is that there's a temptation from the author to expand it to fill, so passes the weight test. Whereas if you notice how I write, I try to distill knowledge as quickly as possible and efficiently as possible, because all my people are time poor. They're brilliant. They're focused on their clients. I just want to transfer knowledge.
The book that caught my eye, Conquering Buffett. So you're a Buffett nerd, I guess, a little bit like myself, and probably a lot of people who are watching this. What do you like most about Warren Buffett's way?
His long-term focus, his simplicity, the dedication he's got in terms of, and I try to apply that to our business, that waiting for the right opportunity. So we have capital in our business, and I know Warren's been blessed with capital for a long time, but he writes regularly in his chairman's letters, we're not doing anything, we can't do anything, it's too frothy. Yeah, I've just got to wait. What's he called it? Like this perfect swing for the baseball hit. He's just waiting for the home run hit. I like that discipline to looking at opportunities. And and I like his humility. I like his Dexter Shoe story about how his worst investment because of how much shares he gave away. The guy's brilliant and very simple. It's incredibly simple for somebody who's achieved so much.
Yeah, I couldn't agree more. Okay, so this is an interesting segue now. Actually, I wasn't going to ask this question yet. I was going to ask this question later, but I was reading through your annual report and I got to the share payments, the share payments initiative that you guys have. it is anything but simple to understand
Yeah.
that. And as a layman who is not very proficient at reading share-based incentive programs,
Yeah.
can you give us the thought process behind its implementation? And I understand like how incentives work and why the need for incentives, but maybe in your words, you can give us an explanation of, you don't need to tell me how it works or anything, but like, what was the thought process behind the plan?
Okay, well, there's two elements that goes through in terms of the charges in our accounts. So I'm trying to keep it at a high level basis. When before we floated the business, we issued shares to the partners and employees in the business. Yeah, so that's before we floated. Now, the accounting standards require you to say, well, really, they've got that because they were part of the business, and therefore that's like remuneration. Yeah,
Yep.
therefore we want to put that through the P&L. So it's not really a P&L cost. We've given away shares before the float. So, but because of the accounting standards, we're required to effectively charge the profit and loss account with the costs. So for those ones in respect of those shares we gave away before the float, I would regard it just as an accounting requirement to reflect the fact they got some value. Yeah.
Yeah. No,
Now,
thought that too. Yep. Keep going. Sorry.
yeah. Now, so and with regard to the executives, it's really a case of trying to make sure we do have alignment, and it's not so much for me, but it's for my successors and the rest of the management team who aren't actually in the equity, to make sure they're more aligned with where the business is going. So all my partners in all their businesses own equity in their businesses. So it's culturally important to me to have people, effectively at the top table, effectively incentivized to be motivated to see the development of the business. And their scheme is all about share price performance. So the executive incentive scheme is all about top tier, top percentiles performance in that comparative group of shares.
You yourself being the largest shareholder, are you okay with essentially slightly diluting yourself each year? I guess it's, you're trying to explain that to me. How do you feel about that?
How do I reconcile something that's clearly against the Warren Buffett tenant?
Yes.
It's because I'm in danger of repeating myself, but it's about that alignment of interest. Yeah. I do believe that the executives should be very aligned with what the shareholders are doing. Yeah. Our business is all around people and motivating people, and I want our executives to be very aligned with shareholder performance. Yeah. I don't want them to feel that they're employees. I go back to this thing. I have a partnership nature. Yeah. I work in partnership with people. A lot of our licensees, I say to them, the legal form may not be that we are in partnership, but I regard myself in partnership. And in terms of shareholders, I regard those as partners in the business. So for me to have executives who aren't partners is a completely alien concept to the culture of the business.
Yep. No, that's good. Yep, that was well said. When you talk with other investors, what is the biggest misconception about the company?
We don't really struggle, I would say, with misconceptions. We have to spend quite a bit of time explaining the license model. So when we start an initial conversation, Andrew, I think they want to pigeonhole us entirely into professional services, and that's an appropriate starting point. And it's then recognizing that whilst we're in professional services, our model is actually empowering people to run their own business. We're licensing people. And then the follow-on misconception then is that it's similar to some of the legal models, which are more based around individuals. So our model is very much around building, finding people to build their own businesses. So an important element of the growth for us in the future will be my licensees continuing to grow. And that was certainly our experience in the first 12 months post-float. Most of the hires, the majority of the hires were our existing licensees taking on people within their own businesses. So we've got just over 20 licensees. We've got nearly 100 people. So each business has got 4 or 5 people in on average. Yeah. So that's the main one people don't get in terms of when we're talking to people. Is actually we're not about individuals. We're about bringing in teams. We want people to work in partnership. So the average is 2 partners and 2 employees, and we want them to scale up and grow the businesses.
Very cool. I'm just going to, I'm really tight and I don't have a Zoom subscription. I'm going to send you another link here in a moment just
Yeah.
because my time's going to run out. And I've still got about 4 or 5 questions to go, but I also need a drink of water. So give me a minute.
Yeah.
I'm going to send you an email with a new invite and we'll pick it up in 5 minutes if that's okay.
Yeah, it's absolutely fine. Yeah.
Appreciate it. Thanks, mate. See ya. All right, James. Next question I have is DSW had some debt pre-IPO, and then you've paid it off. What was the debt for pre-IPO?
It was to buy a business to bring in and license it. So it was another corporate finance business that we brought in. So one of the things the startups, we've obviously got quite a lot of experience in, but I was conscious that in terms of scaling the business, we needed to buy businesses in to effectively, I said, move the business quicker, particularly into new geographies and skill sets. And I was very conscious that we needed to do deals and prove we could deploy capital prior to floating. So we did that. We used debt. That's the first. That was the only time we've used debt in the business. Actually, we've always been cash generative.
Yeah, and as I can see now, yeah, no debt now. So, and you got plenty of cash. Are you finding these acquisitions? Are you finding them yourselves, or are people coming to you, or are you using brokers, or how are you sourcing that some of these acquisitions?
The sources come from all the above, really. But one of the main advantages that we have as a business is the background of business is predominantly corporate finance, and my background is corporate finance. So we get a lot of inbound stuff. So in terms of the brokers would normally send deal opportunities to us. So I get to see a lot of deal opportunities anyway through brokers, through the individual businesses seeing opportunities. And then the third element is outbound inquiry. So I've got a series of service lines that are of interest to me. So I've alluded to the fact that the ones that are really close to what we do are strongest, but I'm also planning beyond that in terms of what's the service line that's going to follow that and what's the service line that's going to follow that. So I've got a database of over 200 companies that I maintain a dialogue with, in terms of trying to make sure that when they are looking at their options, the professional services businesses, that we're involved in early discussions with them, and in doing that, sometimes it prompts a conversation to start a debate quicker than effectively waiting for them to go to market.
Yeah, great. That's I'm very familiar with like serial acquirers, the serial acquirer model out of well, a lot of it's in Sweden, but I understand what you're trying to do there. That's really cool. I fully support that. I think that's great. Next question I have is, are you measuring how happy the fee earners are once they've come into DSW? And essentially, are they happy with the overall support that they get for their 22% fees?
Right. How do we measure it? So we don't measure it per se at the moment. We will have to in the future. So at the moment, if you think about it, we've only got 20 plus relationships. So they are face-to-face meetings, they're personal relationships. So it's really easy for us to get around the business. I don't sort of have a requirement to measure it, though it's a really interesting question because we are already putting in place, partner surveys, employee surveys, because we're planning for the future when that level of engagement is inevitably going to reduce. So we need to start building in other mechanisms for making sure we're getting the right sort of feedback. And I suppose the acid test of whether it's working is about attrition and do we lose people? Yeah. And the reality is that whilst we do lose people on occasions, it's actually quite a low number. So that will always be the acid test of whether we've got it to work. And successful licensees, it's very rare we lose partners. Yeah. They will generally go if they're looking to do something completely different.
Okay, and are they? Let's talk a little bit more about that. Firstly, what's the main reason why someone would stop? Is it? Yeah, tell me what's the number one and maybe number two reasons.
The number one reason is not working. So they really haven't stepped up from being an employee to being an owner. it's been more of an aspiration than a journey they've been able to fulfill. So they wanted to become an owner, but actually lacked the abilities to actually engage with the marketplace, and effectively bring in work and be a conduit for work and to be sought by the marketplace. And it's probably about that sort of personal chemistry and strength of personal brand has not been as strong as they want. So quite often we'll have relationships with people that sort of wither and they know they can't make the breakthrough. They really prefer to be and are best suited to being, more of an employee and having work fed to them rather than being more of a work winner. So I would say that was the number one reason why we might lose partners. But I need to stress it's an exception. It's not the norm. Normally people are successful with us, but that would be the main reason. And then I've generally lost partners that over 20 years I've been in business. I've probably lost 3 or 4 partners I didn't want to lose because they were really good. But one of my favorite expressions is slavery's been abolished. So if they actually find something that appeals to them better, and they've taken, and they've had great opportunities in terms of they've changed direction. They've no longer been an advisor. They've gone into private equity opportunities. And I've had one who's left us, and she's set up her own business, and she's definitely on the mission, and she wants to build something, that's about her in her image. And I get it, because that's why we attract people in the first place. So.
Yeah, cool. And that's life, isn't it? People change their minds after periods of time. I get that. That's a cool. If you were to average out how many people have left, what would be like the average per year, do you think?
So for partners, it's 1 a year.
Oh, yeah. Yep.
1 a year. Employees, it depends on how active the marketplace is. So when we started with the business model, if you think that, as I referred to, one of the other answers was that the partner-employee ratio is really like 1-to-1 in most businesses. So our employees are coming out of the Big Four, working with the partners. They're being hothoused. They're being, their careers and their experience and exposure is exceptional, and they develop really quickly. So we found it for a while, it was easy for us to recruit. And then when the market gets really frothy, we've tended to find the Big Four have said, hey, those guys are really well trained over there. So we did suffer a little bit a couple of years ago where the Big Four then coming back to our people and then sort of super promoting them and offering them great deals, which is super for them. I get it, super for them.
Yeah.
It was a bit frustrating for us. But that's a vagaries of the marketplace. And I understand why people move, because they've got their families and people to support. So if somebody comes back with a double promotion, extra money, then we're going to be vulnerable. So.
Yeah, okay, I understand. Back to a little bit about some of the people who maybe weren't cut out to be a good partner. Do you find it a bit of like a balancing act between you want to get more fee earners in, but you also want to get the right fee earners in? You don't want them to come across and fail, of course. Like that would be not good for anybody, for you guys, for the reputation, for them, So how are you screening the potential fee earners?
Yeah, we've worked really hard on that. So initially it would definitely be around like a personal assessment. So I'd meet somebody and then we sort of talk about them, we get them to present to other partners, and it was much more of an interview process. But in recent years we've recruited essentially we have recruited a talent manager, and somebody's able to do that psychometric assessment. And we've done workshop groups with the partners saying, what are the attributes, what are the characteristics that are likely to define success? And then we've got sort of personality-based questionnaires and interviews with somebody sort of work for us, but independent to the partnership group, to try and drill down into those areas, to try and effectively spot people with a higher propensity to fail earlier in the process. Yeah. So the idea is to try and work out what success looks like, and then look for it when we're interviewing people, so that we try and reduce the number of people who effectively aren't successful with us. Because you're right, we don't want that. We just want people to come and have to be a really positive experience. So we're definitely on the page if that's what we want, and we're continually refining and questioning our partner group, say, what are those characteristics? And it's definitely work in terms of partner attrition.
Yeah. Okay, cool. I guess that'll show up over the next few years. It's probably not like, it's one of those things that takes some time to get going in the business internally for you to, you'll get better at that over time, I'm sure.
Yeah, and we are better. It's hard for me to say whether and you're right, because the question is really spot on in terms of we will definitely get better at it. But Warren's got a great expression about when the tide goes out. Yeah. So when the market's conditions are really difficult, that's when you find out who's really cut out for it. In a buoyant market, everything floats.
Got ya. It'd be interesting to see. It'll be like I have no idea about macro stuff, and I don't know if anything, any dramatic things are coming in the future. But it might be a little bit of both. It might be, if let's say there's a significant downturn, you might have people there might be attrition rates at the big four accounting firms that are all of a sudden looking for something different anyway. So you might actually have a lot of opportunity to get fee earners on board, but you also will be struggling to get them the work possibly at the same time. So it could be an interesting dynamic.
It's a very interesting dynamic. So from our perspective, recruitment is easier when effectively the marketplace is quieter. So because that's, frankly, we work on what I call the push and pull factors. So we work really hard on our pull factors, the autonomy, you can control your own destiny, you'll actually earn more money with us. The push factors, I need people to be disappointed on promotions and bonuses and career objectives. Yeah. And those come together with, a downturn in the economy. Yeah. So promotions get stalled, bonuses get cut, and that's what I need. I need people to be disenchanted with where they are and then motivated to join our model.
Yeah. Interesting. Cool. What keeps you up at night about your business?
Not being able to grow fast enough.
Interesting. Okay.
Seriously, that's the main thing I worry about is how can I scale the business quicker? What can I do to grow the business? How can I make the business a better business? In terms of what if I wake up in the middle of the night, I do it quite often. Yeah, that'll be the stuff that'll be popping in my head. We need to do this. We should be doing that. Yeah.
Okay. Interesting.
I've got highly motivated partners. I've got really highly motivated partners because they run their own business. So sort of slightly different from professional services business, that I know they are deeply committed to their clients. I don't need to monitor from that perspective. They're running their own business. They want to be successful. So all my challenge is about is creating the environment for them to be the best they can be and to bring in more, because I think you alluded to it before, that there's a snowball effect. The bigger we are, the more successful we will become. Yeah.
What are you doing to alleviate that fear that you're having in the middle of the night and trying to grow faster? What are you doing to help that?
It tends to then just drive I need to ring so and so. I need to suggest this as a deal structure. It tends to just drive a number of actions the following morning. So I'll email all my contact base just to remind them that I'm still looking for opportunities, and for people. Yeah.
Good. It sounds like a healthy fear. On a positive note, what are you most proud of about the business you've built?
The people. It's always the people. We have so many really committed, motivated people, and the talent. I'm really proud that they've chosen to hitch their wagon to our train. I love it. I love the people. I think they're fantastic and highly committed. That's the thing I'm most proud about. And then the thing that the other part of it is, I know we started with nothing. So that's another great thing. You started with nothing. So, myself, Mark and John, we started with just our names, just our personal names. We managed to create, we had our own profiles, but we created a corporate profile out of that. And then we managed to attract other people to our journey. So, but starting with nothing and the people, it's the people. It's always the people.
Very cool. I do think the snowball is starting to roll for you guys. So last couple of questions, a few personal ones, just to get more of a feel for you.
Yeah.
I see you like triathlons. I think that was pretty interesting. Why do you like that as a challenge, and what's the strongest leg of the triathlon for you?
Right. Well, I started it because I wanted to keep fit, because I am pretty focused I am driven by and ambitious about the business. and you need to balance that with something, and it's exercise for me. And then the variety. So the triathlon is there's 3 different things to train at rather than always going for a run. So that's what drew me to it. And then it's the dedication, and it's the personal challenge, because you get distances get bigger. So that, can I do it? That mental balance challenge. And you're really focused on that when you're training. I don't know if you do your own training, but when you're that physical exercise, the other stuff goes away, doesn't it? So I found it really good. In terms of the yin and yang, I found it really good counterbalance for me. And my strongest leg is the bike. So what you can't tell from this screen is I'm 6'2". So okay. Long femurs, which means cycling is my strongest leg.
Very interesting. I'm a swimmer is my leg. We could we need a runner and we could do a team. Very cool. I actually totally understand. I play a lot of tennis, and I find that is like it's weirdly meditative. Like you just focus in on that thing at that time. I'm really just looking at the ball. I'm not thinking about, there's no stress, there's no anxiety, there's nothing else going on in my head. It's focus for that. And you kind of realize time goes very quickly, and yeah, good for your health, mental health, I think, just as much as the physical side.
Absolutely. That balance.
I went and saw a company called Technion in Sweden, and Johan, the CEO over there, he does ultra marathons, like really crazy long distances. And I actually, the way he spoke about it was very similar to how you spoke about it. It was just, started off as a thing, a small thing, just to get out of the office and do some exercise, and all of a sudden it's become like this this hobby that they just get really involved in. It's
addicted to as well. You get addicted to it. You get addicted to endorphins. I'm sure you do.
Yeah. Very cool. Last one is about what type of car do you drive, and why did you choose that car?
Well, I've got 2. So I've got a Mercedes sort of SUV thing. I couldn't even tell you the model, so I'm not really a petrol head. So that's because it's nice and functional, and it's got 5 seats, and it's got space in the back for putting stuff. But my fun car is I've got an F-Type Jag soft top. So that's for when I feel like being a petrol. But that's a sunshine car that only comes out when the sun is shining. And because we're in the northwest of England, that restricts it to just a few months of the year.
Do you like driving through the countryside? Is that what the Jag's for?
No, if I'm really honest, I like looking at it more than I like driving it. I think it's a beautiful shaped car.
Yeah, very cool. Look, James, that's it. That's all the questions I have. If you wanted to bring up anything else about your business that I haven't covered that you'd like to, is there a message that you'd like to reiterate, or is there anything that you kind of feel like, we didn't talk about this, it'd be great to say something about? And this is an opportunity, I guess, a lot of people will have no idea about DSW. That's all. And is there anything you'd like to add or anything?
No, I think it's. I've enjoyed the conversation, Andrew. I've really enjoyed the conversation. Just as an aside, I don't have anything to add in terms of, I'm very interested in people's perceptions of the business and dealing with their questions. I think we're on a journey. We've got a lot of momentum behind us, and there's a terrific opportunity ahead. But I'm also balanced enough to know that we're small, and therefore we've still got some real challenges for shareholders and our stakeholders to effectively be bigger, to be a better investment opportunity. So that's the only thing I think is missing from the discussion. Is that we've still got a tricky few years ahead from my perspective in terms of getting us the right scale, so that that snowball's a bit running down the mountain rather than still feel I'm pushing it up a little bit.
Yeah, no, I understand. Yeah, so for anyone who's watching, people who are watching and following along, it's about a 16 million pound market cap roughly at the moment, which is on the very small stage of the journey as a public company. But that's okay. Everyone starts somewhere, and I think it's I think what you're doing is like we talked about the snowball. I'm glad you're still pushing it up the hill, because that's great, because it'll roll further. So I'll end it there, and appreciate your time a lot. So when I'm editing this, I'll edit it out from about here. But look, man, I really appreciate that a lot. That's really cool. It's really you get so much of a feel and an understanding of a business by just talking to people running it, rather than I can read your annual reports and I read your website and stuff like that. And I hear like a friend explained your business to me, and I got my head around it, but like there's millions of businesses, and there's just so many opportunities as
Yeah.
investors. I need to get, and why would I choose you guys over the thousands of other options is the other thing that I have to, weigh up in my head.
Yeah.
And I'm really interested. There's actually, do you know, are you familiar with KPG, like Kelly Partners Group in Australia, by any
I
chance?
am. Yeah.
Yeah,
Slightly different model, but I'm familiar with it. Yeah.
slightly different model. I've invested with them, and I love that model. That's actually kind of how I found you guys. I think my friend
Right.
said, "Oh, you know Kelly Partners Group, you might like this. This will interest you." And yeah, just a fascinating business over there. Yeah, it is a different model. And
It's
I don't
like
really.
they're more broader based in terms of the services they offer. We try to very much focus on the what I call the specialist high end.
Mhm.
Yeah. So I like the businesses where I don't need. So we should quite perverse from an investor perspective. I don't need them to have recurring annual fees, because those areas, from my perspective, tend to be the most vulnerable to price pressure, and the direction's only going to be automation and going down in value. Yeah. So that's what I call routine accounting and tax services. So I'm more focused on what I call the higher value add, because I actually think that's where the technology's got you're going to have the least impact. Yeah. And in reality, there's going to be greater inflation in those areas, because people need to access experts who can interpret data and what's going on. Yeah.
Yeah, very good point. Actually, I was writing my notes, like a thesis about you guys, just in my own books, and was thinking like, how would this be disrupted by technology in the future? And I was like, well, some elements, of course, there'll be some disruption coming. There always is, but if anything, it'll help your business. There'll be less manual entering of stuff. But just like I don't think doctors are going away anytime soon, even if the medical diagnosis might go away, you still need that human element to explain it to somebody and look them in the eye and calm them down and say, okay, this is what I think the strategy should be, and this is why. And there is a human element to, I think, financial services just as much, especially if you're talking like wealth management or pension plans or,
especially if the numbers are big.
Yeah, right. Okay. Yep. You just totally understand. So I think you're on the right track. Cool. All right. I think that's it. I really would love to talk more, but I've got no more questions right now, but hopefully we can stay in touch over time. And if I have any more questions, I'll shoot them to you, but otherwise I appreciate this. This will go out in probably, give me a couple of weeks. And I'll put it together, but I'll send you a message when I do.
Yeah. The other thing, just let you know, I love the story about your granddad.
You watched the video on my channel. Oh, okay. Appreciate it. Yeah. And he's passed now, but unbelievable. I always get totally blown away by, like, I know it seems, it doesn't seem like much when I was growing up as like a little kid, but as I got older, I was just like, this guy was nuts. Like, what an absolute freak for him to do this. Like, it blew my mind. It still does. And like the fact that he just, it was so Wild West what he was doing, where it was like, if he got bitten by a snake or anything happened, like while he was out there, he was dead. Like there was no backups.
No, it's just that somebody's giving me some free land. I'm going to make it work.
Yeah. It's crazy to think that was only like, that was like what, 60 years ago or so. That's still crazy that happened so recently in my head.
I enjoyed the story.
I appreciate it. Thanks, mate.